Welcome back to Module 2, How to Protect You and Your Family. In this module, we'll be looking at the different types of cover and how to put a protection package in place. But firstly, let's do a recap of the last module. We showed that your income is your most valuable asset and that we protect our houses and cars and insure those. So why don't we protect our most valuable asset, which is our ability to earn an income? We also looked at the three things that can stop us getting to retirement: death, permanent disability, and a trauma event like a cancer or a heart attack. So let's have a look at the different types of cover and how they protect you. The first one is income protection, which is payable if you're unable to work at full capacity or at all. Doesn't matter if you're fully disabled, you can be partial as well, due to sickness or injury. So this is sickness or injury at work, not at work, covered all around the world, worldwide cover. And you need it because most people I've found can only survive up to 4 weeks, maybe at a stretch up to 90 days. Most people run out of money by 90 days. So what happens after that? How are you going to fund your living? Second type of insurance which protects you is trauma. And to me, this is the most valuable one because you've got a 1 in 2 chance of actually claiming on this one. Income protection, you've got a 1 in 3 chance, which is also very high. So for trauma, it's payable if you suffer a specified medical condition like heart attack, cancer or stroke. There's also 45 to 50 other ones depending on what type of policy you get. And it's payable because if you'd like the security of a lump sum cash cushion in the event you suffer from a debilitating medical condition. Third one is life insurance, which most people have heard of, and it's payable on your death or terminal illness. So it's great that now if you're terminally ill, basically you'll get your lump sum 12 months before you die, and it allows you to actually put your affairs in order and enjoy the time with your family while you can. And the reason why you need it is to pay off your debt. So there's a great saying, the debt should die with the person who created it. So you can be mortgage free and also provide an income to your family. And lastly, total and permanent disability is payable when you're unable to ever work due to sickness or injury. There's 3 types of cover: any, own or health events. It's a bit outside the concept of this video, but I'm a big believer of own and health events because any occupation is really hard to claim. And that's probably the one that you've got in your super policy, but it's very hard to claim, so it's of very little use. When do I need it? Again, if you've got debts or dependents, you wipe out your mortgage, wipe out your debts, and have an income to fund your family's lifestyle. Let's have a look at how those 4 insurance products protect you from disability, death, and disablement. Income protection is a revenue stream, so it protects you against sickness and accident for being disabled, and it's 100% tax deductible. How much you pay depends on whether you're male or female, how old you are. As you get older, obviously it costs more, but there's things like level premiums you can do to basically spread that out and make it more affordable. What health you're in, 90% of people get cover at standard rates. Occupation, obviously a blue collar worker or someone doing heavy labour work is more likely to have a claim. In fact, 70% of all claims are from trades and manual occupations. So they pay more than someone who's a white collar. Waiting period is simply how long you have to wait before you're eligible to claim. A typical one is 30 or 90 days to match the time it takes when you would run out of money. And the benefit period is how long the insurance company is going to pay you for. You can get it up to age 70. And obviously the longer the benefit period, the higher the premiums as well. Trauma, as we mentioned, is a lump sum payment. People use it to reduce their debt, get rid of some of their mortgage, to use it for medical treatment. I heard the cancer bill to get full treatment, which is not on the accepted list, is $110,000. My father used his income protection policy to actually pay for experimental drugs when he got lung cancer. So I thoroughly support this option. House modifications if you need to do that. And as I mentioned, even though you're covered for about 50 things, the big 3, cancer, heart attack, stroke, make up about 90 to 90% of claims. And as we mentioned, for life insurance and total and permanent disability, they get rid of your debt, they provide income for your family, maintain your status quo, You can get it inside super or outside super. Again, there's pros and cons to both, but that's our job to explain the pros and cons to you. And also, we mentioned before, the terminal illness benefit if you've got less than 12 months to live. And just quickly, here's some of my favourite benefits. The break bones benefit. Imagine being able to get 1 to 3 months extra salary on top of your income protection, even if you don't get to the waiting period. If you break your arm, leg, pelvis, wrist or ankle, it can happen at work or not at work, surfing, footy, doesn't matter. 1 to 3 months of your salary paid as a lump sum plus your income protection policy if you get to the waiting period. Second benefit I love is the cancer cash cushion. This pays you 6 months extra salary if you have cancer, heart attack or stroke. Okay, so I love these benefits and we recommend these with our clients. And finally, getting a comprehensive risk protection package in place will mean that you and your family will be protected from the financial stress caused by sickness, accident or death. Alternatively, if you don't take action, your financial house could fall down. We'll discuss the what if you do protect your family, what if you don't in our next video. Thanks for listening. If you have any questions, I'd be happy.